7.1% year on year that we saw coming through, 0.7% month on month. Quite a big number. Most people did not expect that such buoyancy to come through for the month of August. Give us your sense on the number and where to from here.
Yes, I think we were all a bit surprised. Everyone was waiting for the August number with great expectation because the previous months have been such messy numbers given the base and given that we had the World Cup last year. But the 7.1% was ahead of our expectations, certainly. We were expecting that from now onwards, heading into the rest of the year, we would probably see a slight dampening in the consumer spending, as opposed to such a lovely heightening. But we did get some early messages in the car sales, so it seems that the consumer certainly August was feeling pretty strong.
Yeah. Well, I mean, we saw that 7.1% number. Most had expected around 5.2. No consensus was sitting around 4.9 or so. Do you think that this is a fair number, that we can actually continue to see this kind of trajectory to the upside? Is the consumer in a more comfortable state?
Remembering that this is August, and August is before we started seeing some real ructions over in Europe and the rest of the world, I would think that the consumer would also be aware of that, and one certainly senses that there's a confidence element that may have started creeping in from September onwards. So I'm not sure that we will continue to see the 7% for the rest of the year. And then further on that, we also are expecting a whole lot more food inflation, which we have been expecting would put pressure on the consumer in the second half of the year. So at some point, I still think that will feed through. This may just be a 1 month effect.
Well, looking at the subcategories, it's quite fascinating to see household furniture, appliances and equipment growing by 14.3% year on year. Those are very strong, and we know that the local currency, the strength in the rand, has actually been one of the big creators of this kind of buoyancy within the market. Do you think that those days are over, given the fact that the rand is starting to weaken?
Well, I don't think the rand has weakened significantly enough. I think we're still getting some very good, cheap products. So no, I don't think that would be a reason to dampen those products. Those sort of products sell particularly well when the consumer is feeling quite confident and there's excess cash in the pocket. So if our theory is right that there won't be that much excess cash for the second half of the year, we would start seeing a little bit more pressure on those products. But I certainly don't think the inflation in those products are starting to push through yet.
Jeanine,
in fact, in these stats, there's still deflation in those products, and I think that will continue, or at least only lead up to very low inflation in the next few months.
What's quite perplexing is the fact that the only subcategory that actually declined was food, beverages and tobacco, which was down 1.3% year on year in August. People drinking and eating less?
No, I think that there's an error in that. Remember that the way they measure this is they start with a nominal and then they deflate it by what they think food inflation is. So the nominal is an understandable figure because it was somewhere near sort of the 6%, which I think is what we're seeing come through the ShopRites and Pick n Pays and the likes. But then what they're using to get to the real number is a far higher food inflation number, and I really don't think none of the food retailers we speak to were seeing that amount of food inflation in August, although we would expect more going forward, but at that point there was not that much. So I don't think that the real food number is really reflecting what we're seeing out there.
Jeanine, given the fact that we've seen such a strong rise in retail sales, what does this spell for the interest rate environment? And of course, we've also got to look at that against the CPI number that was released, in fact, today, 5.7%, slightly higher than most had expected. Do you think that there is a chance of a possible rate cut down the line?
We certainly aren't expecting a rate cut at the moment. We're also not expecting a rate hike. One would think with such a strong consumer, maybe rate hikes were on the horizon. But no, firstly, I'm not sure that this month is an aberration or not. I don't think that the Reserve Bank would react until they started seeing a little bit more of this. And no, we don't think that there's a rate cut either, because as it stands, there's not enough statistics to say that the consumer is really under that much pressure. So I think right now we are probably expecting a flat for longer environment.